All right, let's talk about CES Energy Solutions. We're going to dig in and ask a pretty big question today. In a sector that's famous for its wild ups and downs, could this company actually be a truly resilient, long-term investment? Let's find out.
If you've ever put your money in the energy sector, you know the feeling, right? The highs are incredible, but the lows, man, they can be absolutely brutal. It's a cycle that really tests your patience. But what if there was another way to approach this space?
And that's where CES Energy Solutions comes into the picture. See, this isn't your standard drilling company. Its entire business model is actually designed to handle the storms of the energy market in a really unique way.
And hey, let's just get right to the point. The bottom line from the analysis is pretty clear. CES looks like a compelling, long-term bullish opportunity. So for the next few minutes, we're going to unpack exactly why that is.
Okay, first up, a different kind of energy stock. So what is it that really makes this company stand out from the crowd? Well, it all boils down to what they actually do. So CES isn't selling these giant, super expensive drilling rigs. No. Instead, they provide the essential, consumable chemicals that are needed through the entire life of an oil and gas well. We're talking things like drilling fluids, chemicals to stop corrosion, all the stuff that gets used up and has to be bought again and again. This creates a really consistent revenue stream, which makes it a very, very sticky business.
Section 2, the core bullish thesis. Now, this business model creates a really specific and powerful investment case, and we can actually break it down into 3 simple pillars. So you've got these 3 things working together perfectly. A business model that can take a punch, a system that's just a machine for generating cash, and a financial foundation that is rock solid. Let's just quickly touch on that first point.
And here it is, the secret sauce to their resilience. Think about it. Even when oil prices tank and companies slam the brakes on drilling new wells, all those existing wells still have to keep pumping. And to do that, they still need CES's chemicals. This acts like a shock absorber, protecting them from the worst of those industry downturns.
Part 3, the financial proof. All right, that all sounds great on paper, but does it actually work in the real world? Let's get into the financials and see the proof in the numbers.
And yeah, the proof really is in the performance. Just look at these recent results. The company is showing solid growth on the top line and has hit record profitability. That EBITDA number you see, just think of it as a measure of their core operational earnings, and it is hitting all-time highs. This isn't some story about what might happen in the future. This is about real financial strength right now.
Okay, before we jump to the next slide, we need to quickly get our heads around a key idea, the working capital surplus. Put simply, it's how we measure a company's short-term financial health. When this number is big and positive, it means the company has way more than enough easy-to-access assets to cover all of its debts. It's like having a huge financial safety net.
And here is the number that just blows me away. At the end of the first quarter of 2025, CES had a working capital surplus that was over $217 million larger than its entire debt load. Just let that sink in for a second. This gives them this massive cushion, incredible flexibility, and it just dramatically lowers their financial risk.
So what does a company with all that cash do? Well, it gives it back to the people who own the company, the shareholders. In just 1 quarter, they returned over $28 million. And look at how they did it. The vast majority was used to aggressively buy back their own stock. That is a huge vote of confidence from management.
And it's not just about the buybacks. They also took care of dividend investors with a massive 42% hike to the quarterly dividend late last year. This is not a company that's just sitting on its cash. It's a company that is actively rewarding its owners.
Section 4. What could go wrong? Okay, so far the picture is looking pretty rosy. But no investment is a sure thing. To do our homework, we have to look at the other side of the coin, the potential challenges.
So here are the main things you gotta watch. Growing too fast could actually put a strain on that working capital advantage. The cost of their raw materials could go up and down. And of course, a really bad, really long downturn in the energy sector would eventually hit them. These are definitely real risks, but as we're about to see, you have to put them in context. All right, our final section, the long-term verdict. So let's weigh those risks against the company's strengths and come to a final conclusion on its long-term potential.
This table really says it all. The analysis points to a 60% chance for the bull case. That's the one where the company becomes a cash flow machine and delivers huge returns. Now look at the bear case, where things go south. That's only given a 10% probability. The odds here are heavily skewed toward a positive outcome.
In this slide right here, this pulls the whole story together. On one side, you have an exceptionally low-risk financial setup thanks to that low debt and incredible working capital surplus. And on the other side, you've got this high-return engine, churning out a fantastic 22% return on capital employed and just aggressively sending cash back to shareholders. I mean, it's really the best of both worlds.
So what's the big takeaway from all this? First, this is a long-term play, not a get-rich-quick trade. The real value here is in that consistent, recurring cash flow. And the main things you'll want to keep an eye on in their reports are how they're managing that working capital and where they're spending their money. Which kind of leaves us with one final thought. In an industry that has always been defined by volatility, CES has built this model based on resilience, financial discipline, and rewarding its shareholders. It really makes you wonder, is this focus on stability and cash flow the new blueprint for what a successful modern energy investment should look like?